Now, in this video class, I'm going to take into account the valuation of goodwill. So, first of all, we must know what is goodwill. Goodwill is an intangible asset. So, what is this intangible asset? Intangible asset is nothing but which we cannot see, but we can feel. And some of the people, they are having the opinion that goodwill is a fictitious asset. Okay, it is not a fictitious asset, please. Actually speaking, goodwill is not a fictitious asset. It is nothing but the name and fame or the reputation of any business, which will help the business in acquiring the profits. So when you have this goodwill, then only you can run the show. Suppose if there is no goodwill at all for any business organization or for any business, you cannot run the show. So goodwill is compulsory. Goodwill is compulsory. Whatever it may be the type of organization, business organization, whether you take a sole trade business, okay, whether you go for a HUF, Hindu Undivided Family, whether you go for a partnership business, whether you go for a company, joint stock company, or whether you go for a cooperative society, whatever it may be the form of organization, compulsory you must have this goodwill. So then only you can run the show. Then only you can carry on the business. Otherwise, it is highly impossible to carry the business on sound lines. So some people, they are asking, what is goodwill, sir? Okay, goodwill may be said to be that element arising from reputation, connection, or other advantage possessed by a business which enables it to earn greater profits than the return normally to be expected in the capital represented by the net tangible assets employed in the business. This is about goodwill. This is about goodwill. And some other people also, they have taken this. And the main thing that we come across, accounting standards. Okay, goodwill is the difference between the value of a business as a whole and the aggregate of their face values of its separable net assets. Yeah, this is the finest definition given by accounting standard number 22. Okay. Once again, it is the difference between the value of a business as a whole and the aggregate of the fair values of its separable net assets. Okay. Separable net assets are those assets which can be identified and sold out without necessarily disposing of the business as a whole. Okay, this is nothing but the goodwill. Okay. Some people, they define this. Goodwill is the present value of a firm's anticipated excess earnings. Anticipated excess earnings. Some people, they define goodwill like this. So, but whatever it may be, it is nothing but an intangible asset which helps a business organization in earning the greater profits. That is compulsory. That is obvious. You cannot remove that. And what are the features that we come across for goodwill? Goodwill is incapable of realization separately from the business as a whole. That is, you cannot take that. You cannot take that completely from a business, okay, as a whole, and you cannot realize that. Value of goodwill has no relationship to any costs which might have been incurred. So you'll come across costs, some different types of costs, material costs, labor cost, all these things you'll come across, marginal cost, standard cost, okay, historical cost, like this, explicit, implicit, all that you'll come across. But whatever it may be, you cannot come to know about the cost of goodwill. It is a different thing and it is a separate thing. It's not related to any cost. The value of goodwill may be positive or negative. If positive, when the value of business is more than the value of its net separable assets, and negative, then the value of business is less than the value of its net separable assets. So goodwill, it may be positive or it may be negative. Okay, so when it is said to be a positive goodwill, okay, when the value of the business, when it is more than the separable assets, then we can say that it is nothing but a positive goodwill, and vice versa. That is negative goodwill. The value of goodwill fluctuates from time to time due to internal and external factors. Okay, don't be of that opinion that the goodwill value will be stable. It fluctuates, okay, taking into account the internal and external factors. It is not possible to value separately each of the intangible factors contributing to goodwill. So whatever it may be, the factors that are affecting this goodwill, we cannot able to assess and we cannot able to value them. Assessment of the value of goodwill is highly subjective and differs from valuer to valuer. You see, this goodwill, okay, it differs from person to person because the valuation of the one person, it will be different from that of another person. So automatically, assessment of value of goodwill, it is very difficult and it is very, it is not same, sorry to say, it is not same, because from one person to another person, when the valuation, when it is coming, automatically it will show some difference. Goodwill may be inherent or purchased goodwill. Yeah, this is one thing that we have to learn. Goodwill may be inherent, that is inside, or purchased. We can purchase the goodwill. Okay, inherent goodwill is internally generated. It is not shown in financial statements. It is not included in purchase consideration, and its valuation depends upon the subjective judgment of the valuer. Inherent goodwill. It depends upon the judgment of the valuer, whomever it may be. And this purchased goodwill, it is entirely different from this inherent goodwill. We have to purchase, taking into account the basis of the profits. Taking into account the basis of the profits, we have to purchase the goodwill amount. We have to take the profits, we have to take the average, and we have to purchase for so many years. That the same amount of profits are going to come for the next period. Like that, we have to purchase. So these are the various features that we come across for goodwill. Okay, what is the necessity and what is the need for goodwill? Okay, don't be of that opinion that this goodwill is not necessary. It is necessary to a business organization. Okay, not only to a business organization, but for an individual also, it is very, very necessary. I'm going to tell you a small example. When you go outside, and people, when they greet you, automatically the name and fame will be more. So that is nothing but the goodwill. When no one greets you, automatically it is said to be that the goodwill is not nil or zero. In the same form, in the same way, every organization, business organization, they require this goodwill. That is sole trade concern, HUF, partnership business, joint stock companies, cooperative societies, all these things, they require this goodwill. Unless otherwise, they cannot run the shows. Yeah. The need for valuation of goodwill depends upon the form of business organization. In case of sole trading concern, it is usually valued at the time of selling the business. See the picture. For sole trade concern, at the time of selling of the business, it will be taken into account. Yeah. In case of partnership businesses, the necessity arises in the following cases. The necessity of goodwill, it will arise in these following cases. When a new partner is admitted, when a partner retires or expires, when there is a change in profit sharing ratio among the partners, when the firm sells its business to a company or is amalgamated with another firm, these are the various places where the goodwill will play an important role. Now, when we go for joint stock company, when two or more companies amalgamate, when one company takes over another company, when a company wants to acquire controlling interest in another company, and when government takes over the business. These are the various situations where the goodwill importance and necessity is more. Okay, fine. Now, what are the factors affecting the goodwill, the value of goodwill? As it is quite evident that we cannot see with our naked eye, but we can feel. So, as you cannot see, don't be of that opinion that this goodwill will not help you. It will help you a lot. So, we have to show some value for this goodwill. We have to keep some value for this goodwill, and that is nothing but valuation of goodwill. And how we have to, what are the factors that affects the valuation of goodwill? Profits expected to be earned by the concern. Profitability of a concern depends upon several factors such as nature of business, favorable location or site, skill of management, position of trademarks, patents and copyrights, future competition, money market conditions, etc. All these things. All these are nothing but the factors. Okay. And when you come across these factors, automatically the profitability will increase. Whenever there is a profitability, automatically we can say that there is goodwill. We can go for valuation of goodwill. Next, capital requirement. This is the second important thing. How much capital we require? For that, the goodwill will play an important. Whether the company or whether the business or it is having any name and fame or reputation, we have to see. Basing upon that, their capital requirement it will be. Okay. Next, possibility of transfer of goodwill. Possibility of transfer of goodwill. Whether the goodwill amount can be transferred or not, we have to see. When it is possible, we can go for valuation of goodwill. When it is impossible to transfer, it is mere ways to go for valuation of goodwill. So like this, we'll come across. And what are the methods for valuation of goodwill? When we go for partnership business, one thing you have to keep in mind is, when we go to partnership business, they will treat the goodwill amount. In case of retirement, admission of a partner, we'll treat, that is nothing but treatment of goodwill. Now we are going for the various methods for valuation of goodwill. Goodwill can be valued in four ways. Okay, first one is average profits method. Average profits method. Second one, super profits method. Third one, capitalization method. And fourth one, annuity method. These are the four methods for valuation of goodwill. So what is average profits method? Okay. Under this method, the value of goodwill is calculated on the basis of average profits for the past few years, multiplied by the number of years in which anticipated profits will be available. This method is generally adopted when a partner dies or retires. This is about the average profits method. That is, we take into account the past year's profits, anticipating the same amount of profits in the future coming period. We have to take into account this valuation of goodwill. That is nothing but average profits method. Now, coming to super profits method. Whatever it may be, the profit that you come across over and above the expected profit, the difference we'll call that thing as super profit. So can you tell me about an example for this? Okay, good. Okay. Suppose if a business, if it is getting 10,000 rupees continuously every year. First year it got 10,000, second year it got 10,000, third year it got 10,000, fourth year it got 10,000. So in the fifth year, the businessman, he will anticipate only 10,000 rupees. And we'll call that thing as normal profit. And by God's grace or by some magical things, if he gets 50,000, if he gets 50,000 rupees in the fifth year profit, so normal profit is 10,000, what he anticipated by taking into account the past experiences. Since 4 years, he is getting 10,000 rupees only profit, and all of a sudden 50,000 came. So 40,000 is excess amount, and that excess amount we can take that as profit, super profits. So this super profits, whatever he get into future coming period, number of years, if you multiply that, automatically you are going to get the goodwill amount. Under this method, the future maintainable profits of the concern whose goodwill is to be purchased is compared with normal profits. If the estimated future profits are more than the normal profit, the difference is known as super profit. This is a measure of extra profits earned by the firm. Goodwill is ascertained by multiplying the super profits by the number of years in which the super profits is expected in future. This is the thing that we come across. Okay, now, before going for super profits, how the super profits are to be calculated? Every person they'll get a doubt. And for calculation of super profits, some of the items we have to take into account. We have to calculate. For example, first one is capital employed and average capital employed. Okay, capital employed and average capital employed. So what is this capital employed, sir? How much capital you are employing in the business? And how can we come to know? There is a method. You have to take into account the total assets, and from that you have to deduct the outside liabilities, whatever it may be, the net amount, we can take that as capital employed. Assets other than goodwill and fictitious assets like preliminary expenses and non-trading assets such as government securities. From that, less liabilities due to outside parties will get the capital employed. Now, average capital employed. Opening capital employed plus closing capital employed divided by 2. That is nothing but average capital employed. Okay, sometimes we'll come to know about this opening and closing capital, but we don't know what is the opening capital. Okay, in that case, how to calculate this average capital employed? So there is a method, there is a way. So whatever it may be the capital employed that we come across, from that we have to deduct half of the current year profits. Half of the current year profits. When you deduct that, automatically you are going to get this average capital employed. And for calculation of capital employed, there are 2 approaches. Previously, I told you about this assets approach. Now we are going for liabilities approach. That thing also will give you the capital employed. So liability side approach, you have to take into account the share capital, reserve fund, profit and loss account, trade balance, appreciation in the value of assets due to revaluation, all these things you have to add, and less goodwill already existed, preliminary expenses and the other fictitious assets, non-trading assets fall in the value of assets due to revaluation, all these things you have to deduct. So thereby, whatever it may be, the quotient or whatever it may be, the result that you come across, it is nothing but capital employed. Yeah. After capital employed and average capital employed, you have to go for normal profits. Normally, how much profits you are going to get? At the end of every financial year, what is the normal profit that you are going to get? That thing you have to take into account. That is nothing but normal profit. Normal profit is equal to normal rate of return by 100 into average capital employed. Normal rate of return divided by 100 into average capital employed. You'll get the normal profit. Now, after that, we are going for future maintainable profits. Okay. And this topic tomorrow, I'm going to reveal this future maintainable profits. Okay. Until then, have a nice day.